Hello everyone, welcome to the series of videos that I may create for future as well. So this particular video that I'm recording, it's focused on managerial accounting, and the lecture that we am recording today is strictly focused on job order costing. So to get started with this particular lecture that I have today, it may go from anywhere 45 minutes to 1 hour and 30 minutes, depending on how much in depth that I go into the certain topics or subtopics I have in the job order costing. I'm going to try to strict myself with the topics that I have in this PowerPoint. So I may have a subsequent recording from this video that may lead into a practical question that focus on job order costing. So this is the quick learning objectives that I created from this particular chapter, which is chapter 5 from McGrath's test book. And this chapter is called System Design Job Order Costing. So the 7 learning objectives that we have for today's class is first, we're going to start the lecture by looking at the two different cost systems that we have. One is a process costing versus job order costing. We'll differentiate between those two things. The next, we're going to talk about the flow of the cost through job order costing. So job order costing is an important topic because there's a lot of businesses that are out there use job order costing. So you will understand from this learning objective is how the cost is allocated between the different jobs the company works on at the same time. Leading to that, we have an important topic is allocation of the manufacturing overhead cost using a predetermined overhead rate. So one of the biggest challenge for the companies is when they are estimating the cost. Any direct cost, as you know from the previous chapter, is easy to determine because you know how much projects you're going to work on. That varies with the number of projects that you're going to be working. So you can easily determine or estimate, but the overhead is something that you cannot determine until the end of the year. So what we do is we look at the predefined overhead rate and calculate an estimate rate and apply it to each of the jobs as you move forward. So we're going to go through the process of how we calculate that rate and how do we apply that into a costing system. So now all of you guys are an accountant, so therefore it is important once we understand the flow of the transactions in job order costing that we focus on the journal entries. Is when we look at the flow and we will relate back to that flow and see how the journal entries will work in a job order costing as well. And then number 5 is once we know that number 3, when we allocating the predefined overhead rate and allocate the job. So what we have is we either over applied or under applied the overhead. And then we're going to look at is how do we clear that out? Okay, what is the process for overhead rate to apply? And then in number 7, we're going to look at the under applied overhead and apply it and clear that out from the system and apply it to either cost of goods sold or to the other account depending on what is the status. Number 6 is actually creating a schedule. So we're going to look at the schedule that we will create for cost of goods sold, which actually starts on cost of goods manufactured. So these are 7 learning objectives that we're going to talk about today. Okay, so starting with the very first one that we have is what's the difference between a job order costing and a process costing. So after you complete this chapter, you are going to jump into chapter number 6 is called process costing. So to easily determine what the difference between job order costing and process costing is when we look at the job order costing, we strictly focus on a companies that will have multiple jobs going at the same time. So for example, I'm going to give you some examples that you can easily relate back to is number 1, if you have a landscaping business. So when you're doing a landscaping business, always remember that you're not going to be working on one job, right? Or the company is big, they have multiple employees, they may have multiple sites going on at the same time. So in that case, what happened is every job is using its own material, labor, and some of the overhead cost as well. So in that case, is any project or any company that have multiple jobs going on at the same time, it's considered to be a job order costing. Whereas the process costing is falls into the bracket where the businesses are doing things step by step. So it's a process that they have to go through. So if the company has three different process, and they cannot do step number three without doing step number two, and they cannot do step number two without doing step number one. So if they have to go through those steps, that's what is called process costing. A simple example that I can give you is if you think about a bag of chips that you purchase from the store. If I were to run a company and produce that bag of chips, it has to go through the process. The first process will be that we will cut the potatoes, dry the potatoes, then fry the potatoes, and then after the potatoes are fried, then it goes to a seasoning, and then after the seasoning it goes to packing, and then it goes out to go to the customer. So everything happens with the process. The first step is they will peel the potatoes and cut them. Okay, that's step number one. Once that part is done, all the cost that's being allocated will move into the other step is where they fry the chips. Once the chips are fried, then it goes to the next department where they do a seasoning for those chips. And then after that is done, it goes to the packing, and that's where it gets packed, sealed, to the quality check, and goes out to sell to the customer. So these kind of process is called process costing. Okay. Another example that I can give you is the automobile as well. They don't make the car at the same time. What they do is they make the bodies, they make the engine, then they go to assembly, inspection, and then goes finally to the customer. Okay. So when those things are happening, that's called process costing. So job order costing, when many products are being produced at each period and the products are manufactured to order, so we don't produce it in bulk. As the order comes, you produce them or you complete the task, and each job order requires a tracing allocated to each job, and there's a proper record keeping that's happened for each job, so you can understand how much cost goes to each job. Okay, so there are some examples that we have. An aircraft manufacturer, because they won't manufacture in bulk, they will receive order and they will create the aeroplane based on the order they received. Large scale construction company, if they're making houses, they're gonna do it on a job order versus just producing in bulk. Greeting cards, if they're making a unique cards that are strictly for a festive, then it's also job order costing as well. So process costing I already mentioned, when you are involved into making one product but it has to go through a different step. So it's a single product that's being produced, and the one product is indistinguishable, so that means it's the same product, very similar than one or the other, and it happens in a batch, right? And once the total cost is allocated, then what they do is they look at the total cost and see how many they produced, and they will do an average cost. Whereas in the job order costing, every job will have its own cost being allocated, and you will just allocate, and that will be the job cost. But in this case, everything will be allocated using the average. So the good example is a cement mixing company. To mix the cement has to go through a process. Petro-Canada, again a refining oil, so it has to go through a process of digging the oil, doing uh, the they do a cleaning where they convert that into refinery oil. So it has to go through that process, right? So Coca-Cola is very simple, similar example that I explained earlier with the bag of chips. They're very similar than that. So those are considered to be your process costing. So here is a quick question for you. So I'll read the question, you can pause it, answer it, and then move on, and then play it again so you see the next answer. So here I'm asking, giving you an example, saying which of these companies most likely are using job order costing. So they give you 5 options, and then by looking at these 5 options, you identify which one of these you think are using the job order costing. You can pause, answer, and then play to see the answer. So the answer is architects, because architects, they won't design until they know the job. So it's job order costing, and maybe one architect might be working on different projects at the same time. Caterer for a wedding reception, obviously that's also based on the job. The builder for a commercial fishing vessel, right? So they won't prepare or make the vessel until they receive the order, and it's customized as well. So that is also an example for the job order costing. So as I said earlier, that when we are looking at the job order costing, we always have multiple jobs going at the same time. So usually when we look at the manufacturing cost, as you guys recall the other chapters that you have done, is in manufacturing cost we have three different types of cost. We have direct material, direct labor, and manufacturing overhead. So in a job order costing, all the costs that we are allocating, we're gonna have to look at each job and see how much material is being used for each of the job. So what they will do is there's a prerequisition that will happen. There will be a form that my company creates. Now these days everything is happening electronically. They will trace every material that's going into the job. So direct material and direct labor are easily traceable to the jobs. So anytime you allocate a material to the particular job, what you do is you take that out material and see how much is going for job 1, job 2, job 3. So you assign the job, and then in a job number there is a job cost sheet that everybody will prepare, or the manager is preparing, the supervisor or manager that's being assigned on the job. So the direct material that's being used for each job is allocated, and then they will keep track of those job costs. So direct material, allocate, and then that will be there. Labor, the same thing. How many hours is being used, based on that they will assign how much is the labor cost or direct labor cost for each of the job. So charge direct material and labor cost to each of the jobs as work is being performed. Then the next challenge that happen is the manufacturing overhead cost. So manufacturing overhead cost is any indirect cost that goes in to make the product is called manufacturing overhead. So that manufacturing overhead is also need to be allocated to the jobs. So these are indirect. So therefore, sometimes what happened is we don't know how much of the overhead is going to be there for the company, because some costs may happen now, some may happen in the middle of the year, some may happen at the end of the year. So this is where we're going to spend some time to see how do we allocate the job cost to each of the job. Okay, and that's we're going to look at the predefined overhead rate. So for now, you can understand that this cost we're going to allocate to the job, and that what we call them is applied manufacturing overhead. So we find a rate, and based on that we allocate that to each of the jobs. So this is the term that I was looking for, the material requisition. So usually what companies does is they create a material requisition form. Anytime the material is being used, somebody will prepare this form, and then based on the form they will see how much material is being used, and then you allocate to the jobs. So this is an example where this company have used these materials into this particular job, and this is the job number that they have. So technically this is a job, and we are keeping track of the cost in this cost sheet. Now these days we have a good system. So what the big companies, what they do is they create the jobs, and anytime these allocations are happening, somebody will enter the information, and the other person will approve it, so you guys can see what's going on at every single level. So in this case they use this material, and then based on this the direct material cost that this job has is $660. And the next part they do is, as the job sheet is formed, so typically this is how the job sheet looks like. You see that this is the requisition number, and this is the cost that they have for the material. You see there are three components there. This is the direct material, so it's going to have list of all the costs there, and then this is the requisition for the direct labor, and this is the manufacturing overhead. So all the job sheet is prepared for each separate job that requires the material, labor, and overhead charged to the job. Okay. So right now you see that on this side here, under the direct labor, somebody have ticked in saying 843 ticket number that was created, and there's 5 hours being allocated. That shows up that there's a direct labor allocated to this job based on this 5 hour is $75. You see at the bottom it's summarizing the total cost. So now the job is still active, so it's not adding up, but at the end of the day this is where the cost will be added. Direct labor cost is handled in a similar way as direct material. people who are working directly on a project, the cost is traceable. So in that case, what you do is you look at the job and see, okay, this is directly traceable, and you just directly allocate the way that you allocate it to the material. Again, this can be easily done through a system as well. So as people log in, they are going to ask you is which job are you working on, and you put the job, a system automatically allocate that time here. So see that this is job number this, job number that, and then this is a maintenance. So that means anytime you assign a job, it's considered to be a direct labor. But anything you don't have a cost here, that may go into the manufacturing overhead, because this is the indirect cost. Okay, so now you see that that we were looking at the job number 2B47, the $75 will go there, and there may be another job sheet that will have a job number 2B50, and the $30 will go there directly. So next part is, so we know how we allocate the direct material and direct labor. The next question is, what happened with the overhead? So the manufacturing overhead, you guys know that the manufacturing overhead is any indirect cost that goes in to make the product. In our case, it's going to be any cost that requires the companies to perform those tasks or the jobs that company is working on. Those are considered to be the indirect costs that are not directly traceable, but they are required to complete the job. Such as you have a district supervisor who kind of goes into each job to make sure everything is performed. You may have a staffing manager who kind of goes in, assign the jobs, he administrate all the people who are working, making sure they have proper tools and stuff. You may have a coordinator doing all coordination of other jobs, but those hours that they work on, they don't directly traceable to each job, but you need that to complete the job. Without that, you cannot do that. So any of those costs that exist is going to be considered as a manufacturing overhead. So those costs we cannot determine. So what we have to do is we have to determine a predefined overhead rate that we will allocate as you complete the jobs. So allocation based, such as direct labor hours, direct labor dollar amount, the machine hours, or could be a direct labor cost as well, that can be used to determine or allocate the overhead. So the most common allocation that we use is the labor hours, the direct labor dollar values. Okay, so if you say that, okay, well, the one job is taking certain number of labor hours or certain labor certain dollar values of labor cost, and you can allocate by using a percentage of those. If the project is strictly or mostly driven by the machine hours, then the best way of allocating the hours is using the machine hours. Okay, depending on the nature of the company's job is, or the where what drives the particular job for the company, that's what the company used for allocating their predetermined overhead rate. So why do we use that a base? Because it's impossible or difficult to trace the overhead cost, because sometimes, as I mentioned earlier, you don't know the cost until the end of the year, so it's hard to determine the actual cost. The manufacturing overhead cost consists of many different items, so that means you cannot understand or have the full visibility on the cost. Many types of manufacturing overhead costs are fixed, and the output are fluctuate during the period. So there are some costs that may be higher for 1 month and lower for the other month. So you don't know what the actual cost is, and the variation in the cost is a lot. So therefore, you cannot say that that you're going to allocate less because in that month you have a lesser overhead cost. That's not how it works, right? So you're going to have to make sure that you look at the overall cost of the company for the entire period, because in that case you may ended up allocating more or less to the jobs that are in 1 month versus the other month. Okay, so that's another reason. The timing of the manufacturing overhead cost also varies as well. So that's kind of relating back to number 3 too. So if you have the costs that are due at the end of the year, but that cost is for the entire year, so in that case that cost may be paid in that 1 month, but it's related to the 12 months period. So in that case, you want to make sure that you look at the cost for the period versus considering it only for that 1 month. So when we're looking at the predetermined overhead, two important things that we need. So step number one is when we're looking at the overhead allocation. So first thing that we have to do is we have to compute or calculate the predetermined overhead rate. How do we calculate that? We need two things. The first thing we need is what is the estimated manufacturing overhead cost. Okay, so the company will say that, okay, well, this was the cost of my overhead last year, and we anticipate a 5% increase this year. So based on that, this is my estimated manufacturing overhead cost. You take that cost at the top and divide that by the allocation base. So now the next thing that you're going to do is you're going to look at it and see what is the base that the company is using for that allocation. And that's something that can be either your direct labor cost, direct labor hours, or it could be the machine hours. Very rarely it could be the material used as well. Okay, so it doesn't matter what base. The question or the exercise of the management in a practical situation will tell you what that base is, and these bases are being assigned at the beginning, and most likely they'll be used over the periods. You can't say that this 1 year you're going to use one base and next you're going to change it. That's something that will be used by the companies on a consistent basis. Okay, when you're doing the question in class or the exercises in the textbook, they will tell you as what the company's allocation base is. Okay, so whatever that base is, you're going to estimate as based on the overhead that you estimated, how many periods or what is the estimated units of that allocation base. Okay, just to keep it simple, let's assume that we're using labor hours as our base, and you're going to say that, okay, well, we have 20 jobs that we worked last year, and based on the 20 jobs we're going to be looking at the manufacturing overhead of X amount. Okay, and then we can divide that by is how many hours do we estimate to complete the 20 jobs. So that will be the total hours that you estimate that you're going to have for this period or for that year. So you divide that by, and that will be your predefined overhead rate that we're going to use, and that will be based on, so if it's direct labor, so that rate will be, say, X amount per direct labor hours. Okay, once you determine that rate, then what you do is the next step is to apply that overhead to the jobs. So now you see that how we were looking at the job that we were looking at in the last couple of slides before. We calculate the direct material that was used. We looked at the direct labor that we use in the job. And then what we're going to do is we're going to allocate the overhead as well. So we call them applied overhead. So to calculate the applied overhead for that job, we're going to look at the actual activity as how many hours were used for that job. Okay. You take that hours, because remember in the last example I said we're going to be using the direct labor hour. So we're going to say, okay, well, they use 5 direct labor hour, and what was my rate that I calculated? So you take that rate, multiply by the actual activity, which is the actual direct labor hours, and that is the amount that we're going to allocate to the job. So going back to the same example, so here they gave us the total estimated cost of 320,000, and they assume the direct labor hour that the company is going to use in that period is going to be 40,000. So based on that, it's going to calculate the rate called $8 per direct labor hour. So that's something that will calculate it and say, okay, well, the rate now is $8 per direct labor hour. So this rate is going to be used for the entire year. So every time you complete a job, you're going to look at it for that job, how many hours were used, and then you multiply that hours with that rate to see how much overhead you're going to allocate. So in this example, we're going to assume if there were 27 direct labor hours charged to job number 2B47, the total cost that we allocated for the overhead should be $8 times the 27 direct labor hour. So that means we allocate $216 of direct labor hour. So here is the complete information for that job. So we were looking at the job for 2B47. So we only looked at one example. So now what they did, they used the material, and these were three requisites that were created, and the total material that was just for completed for that job was $1,404. Then look at the direct labor hours. There was many people who were working on the side to complete the job. The total hour that were there was 27 hours, and we calculate the amount as well based on those ticket numbers. The direct labor hour was $320. So then you take that and then you say, okay, well, now the job is complete. And to complete the cost sheet, you're going to make sure that once this part is done, you're going to say, okay, well, this manufacturing overhead is based on the direct labor hour. So then we pick the direct labor hour, which was 27 here, and we use that and multiply by $8 per labor hour, and that gives you $216 of your manufacturing overhead as an applied overhead. So now this is your summary. So once the job is complete, you're going to say, okay, well, to complete this job, we have material use 1404, direct labor 320, manufacturing overhead. So the total product cost is 1,940. So when we completed the job, how many units did we produce? So technically for this job, we produced different two different units. So when we were working on it, we actually were going to allocate that to two different units that we created with that job. So what you do is you take that cost for that job, divide it by 2 to get an average unit price. Okay, so this was a special order coupling that were created, and then you look at that cost. If there was only one job, that is the cost for that job. So now with that job, it was divided into two because it produces 2 units. We calculate the average cost per unit, which divide by this, by the number of unit, and that would be $970 per unit will be the cost for that job. Okay, so now the next part is, why do we need predetermined overhead? So I already mentioned this earlier I said you cannot determine the manufacturing overhead until the end of the year. So what we do is we use the rate and to calculate the cost, so you can allocate the overhead cost on every job as it completes instead of waiting until until the end of the year, because the actual overhead for the period is unknown until the end of the year or the end of the period. So you don't want to wait till the end of the month to determine the actual amount. What you have to do is you need to close the job, make sure that your cost is being allocated so you can see the profit coming in from each of the jobs. So therefore it is important to determine that in advance. Okay, preliminary is based on the estimate rather than the actual. It's computed before the period begins. So we're not gonna complete the rate in the mid of the year. We determine the rate at the beginning of the year and use that throughout the year as we complete the jobs. And it helps the companies to make sure that they analyze each jobs to make sure the profitability is there before they realize at the end of the year that okay, it's too late to allocate, and because at that time you may ended up charging less to your customer and you probably will end up in losses as well. So it's better you keep applying the overhead rate so that way you can determine the actual cost based on those estimates. The choice of allocation base is important. Okay, to me the main thing is you look at what drives the factor for your overhead. If your company is strictly focused on the machines, less on the labor, then maybe it's best to use the machine hours. But if your job is strictly focused on the labor hours, then obviously the best way to use that will be the direct labor hours. So it's entirely based on the nature of the business, the nature of the corporation or the project you're working on, what drives that cost that you are looking at. Okay? So that is what we have to use, or whatever is the, because remember at the end of the day you're estimating it, so the best estimate you can do, the better it will be. So you always look at what drives that cost, and that's something that you may want to use for the allocation base. Okay, competition of unit cost. So usually when you do the job, so it most likely may happen to be doing working on a job and may ended up creating multiple products from their job. So you have to do the average cost. Okay. A good example that I can tell you is that if you're familiar with the housing industry, when the builder builds houses, they don't make one house. What they do is they buy a land and they may make like 6 or 10 houses on that land, and then when they work on it, they will not gonna say, okay, well, how much is material used for each house. What they do is they look at on an average is how much is the cost for that project, and then if they're using a similar houses in that area, what they do is they average that cost there, and this is the cost for each of the house that was there. Okay, so that's what you do is they allocate the material labor cost to the project. Once everything is complete, they look at the total cost that was spent and they average out over the 10 houses, and then that becomes the cost for each of the house, and based on that they set up the price. Okay, so another question for you, and again I'm going to read the question after you I read it. You can pause the video, answer it, and then play it, and then you see the answer. So job number WR53 at NB Fab Inc. requires 200 of tech material, $10 a direct labor hour at $25 per labor hour. The estimated overhead is for the year 260,000, and the direct labor hours were 20,000 estimated. If the overhead allocated based on the labor hours, what should be the recorded cost of job number WR53? Okay, so pause your video, find your answer, and then play it. Okay, so the answer to that question is $830. Okay, so to find the answer, remember that we have three costs that we need to add: material, direct labor, and manufacturing overhead. So direct material, they already told you, is 200. Direct labor, you have used 10 hours, so 10, the average rate is 25, so $250. The next part is the manufacturing overhead. So to do the manufacturing overhead, the first thing that we had to do is find the rate, the overhead rate. To find the overhead rate, I had to take 760,000, which is the estimated cost for the manufacturing overhead, divided by the estimated labor hours, which is 20,000. That gives me the rate of $38 per direct labor hours. Then I take that $38 rate, see how much direct labor hour we have, which is 10, multiply by that, and that gives me my manufacturing overhead applied to that job. And then we add these three components, and the total cost shows up to be $830. Okay, so now this is how the flow of the document works. So this is kind of a real world example. You don't complete or you start a job until you have a sales order. Okay, so when you receive a sales order, somebody is going to go into a sales order, and based on that they will create a production order. So based on that production order, they're going to see, okay, about how much material is required, the labor, and the overhead. Then they start working on the job. So whoever is assigned the manager for that job will keep track of each of the costs going in, which is material, labor, and overhead. And once this is completed, they will have a final sheet called job order costing, and that will tell you how much money is gone into that job. Okay, a more detailed look at the flow cost is required. Obviously here we're looking at the very, like, lower level, but there's a lot of things that goes into the job. So from the accounting prospect, we will do the entries or have that tracked through a T account. So you can either have a WIP account, work in process account, for each job until the job is complete. Now once the job is complete, you close that WIP account for that job, and then that becomes zero, and then you transfer to your cost of goods sold, and then from there it goes out to inventory, and then it's gone, and it's closed to zero. Okay, so we're gonna go through the process through using T accounts or using your journal entries. So here I can explain that through a T account first. Okay, so for an accounting student, it's easy for you to understand how the flow of this works. For non-accountant, you have to maybe play around or work with the numbers to see how this flows into the entries, uh, because it does need to do either if it's a good accounting system or good ERP system that the company has, but at the back end these entries are happening. So when we're looking at this particular situation or a T count, so in reality these are the T count that will be there on your financial statement. The first one is the raw material, the second one is the manufacturing overhead, and the third one is the work in process. So the work in process is actually your job order cost sheet. And this one is sitting on your balance sheet as an inventory until the job is complete. And once the job is complete, you take it out from here and put it into your cost of goods sold. And when we look at the manufacturing overhead, that's also a balance sheet item as well. But remember that you have an actual overhead that you keep spending that goes here. But when you allocate the job, allocate the cost of the manufacturing overhead to WIP, that's what we call them applied. So what we do is we take it out from here, move it to the job as we apply it. The raw material is also in inventory, so when we buy it, we put it here, and when we use that raw material, we take it out from here and put it into the working process. Okay, and this is again your, and so that technically is all these accounts are your balance sheet account, but there is a movement that happens that move things from here to the WIP and then eventually goes to your income statement. Okay, so there is a flow. You use the material, it goes from here, it goes to WIP, but it's still on the balance sheet. Then we have indirect material, right? So that raw material is could be direct or indirect. So if I'm working on a landscaping business and I use the bricks, that's my direct material. Then there's a sand that I need for landscaping, but I don't know how much I need. I may just pick some as I need them, but I cannot trace them. So that's considered to be indirect material. So that will go into manufacturing overhead as I use them. Okay. So because remember this is your actual. So when I use that, I put it into manufacturing overhead. That's because it's a indirect material. So here is my journal entry. So when I buy the raw material, I debit raw material, credit accounts payable. And then what happened next is I start using that, and what happened is I use some material that are direct, some are indirect. So what I do is when I use them, I take it out from the raw material. So I credit my raw material, and then if it's a direct, I debit my work in process inventory. That's my direct material. So going back here to my original sheet, this one is right here. That's my direct material, and the second account that we have there is my indirect. So technically I'm adapting manufacturing overhead. That's my indirect material. Okay, so I take it out from raw material and put it into these accounts. Then I have salaries and wages payable. So we are paying employees. So in that case, when we are paying employees, that's called direct material, people who work directly on a project. So I debit salaries, wages payable. From there it goes to the job. So you see there we are not transferring to expenses because this is manufacturing cost, right? This is a product cost, not a period cost. So what we do is we put them on a balance sheet until the job is complete. So you have done 27 hours, for example, and that 27 times whatever the average rate is, we're going to debit work in process and credit salaries payable. So in reality, it's debit wages expense, but in this case, we use the job order costing, will debit WIP work in process with that job. And then when it comes to indirect material, so you also have indirect labor as well. So in that case, you're going to debit manufacturing overhead, and you're going to credit your salaries payable or salaries and wages payable. Okay, that's your indirect labor. So journal entry, similar process. So this is my direct labor, debit WIP. That's my indirect labor, debit manufacturing overhead, credit your salaries payable. Okay, so that's an example. So then we have other overhead. So now the company keeps spending other expenses as well, such as rent for the factory, that's overhead, any other costs such as utilities, salaries to the supervisor, district manager, salaries to the assistants that may be there to complete the jobs. All that cost is being debited to manufacturing overhead because they are not directly traceable. So that technically is you debit manufacturing overhead and you credit all those expenses. So just going back to the previous slide. So remember, this side is your actual. So now this side we haven't looked at. As the jobs are completed, we'll move them from here to the WIP as well. That may happen in the next few slides. So now after we have allocated or have spent the money, it is sitting right here, right? Any direct labor or any direct material cost that the company spend is sitting in your WIP. Then what happened is, once the job is completed, you will look at your manufacturing overhead, say, well, how much we need to apply to that job. Once you look at that, you have the rate that you calculated. Based on that, you calculate this amount. You take it from the manufacturing overhead and put it into the WIP. To do that, we debit work in process, credit manufacturing overhead. And if you see that, this account is considered to be a clearing account. So on this side, we always have the actual amount. On this side is how much we are applied. And in a perfect world, you should apply what the actual is. But in reality, that's not the case, because this is based on the estimate. And this is your actual money spent. So if you ended up allocating more, you're going to end up with a credit balance. If you ended up spending more than the actual that you allocated, you're going to have a debit balance. Okay, so you, in either case, you either be over applied your overhead or under applied. At the end of the year, you need to clear that account to zero. So we'll look at that in the next few slides as what happened if this manufacturing overhead account has a balance at the end of the year. Okay, to us it is a clearing account. Okay, so let's park that question. We're going to answer that in the next few slides. Non-manufacturing cost, they go directly to your expenses. So anytime we paying admin expenses, the commission expense, marketing expense, depreciation for office equipment, any of those things are called period cost, as you know that already. They are going to go straight into the balance sheet. Okay, so the previously all the costs that we were talking about, the direct labor, direct material, and the manufacturing overhead, they are all product costs. So that means it has to go through the balance sheet item. But these costs, they are non-manufacturing. They are called period costs. They go straight into your income statement. So the journal entry is anytime you're making payment to your office staff or your advertisement expenses, you debit the salaries expense, debit the advertisement expense, and credit the payable or cash depending on how you're paying it. Okay. Now, what happened once the job is complete? So we keep adding the job, cost, material, labor, and overhead. Once the job is complete, we need to close this account to zero as well. So in that case, once the job is completed, I say this is the total cost of goods manufactured for that job. Now once the cost is completed, you're going to have to transfer it from here into your finished goods. Okay, so what you're going to do is, to do that, you're going to credit your WIP account and debit finish inventory. You see that we are still in the balance sheet. We take it from the material, raw material, put it into the WIP, and now from the WIP goes to the finished goods still sitting on the balance sheet. So to do that, we will debit finished goods inventory and we credit WIP. Okay. And what happened after? So once it's sitting in the finished goods, it will stay there until you sell or deliver that job to your customer. Okay, so now the job is completed. You sign the agreement with your customer, and once that agreement is signed, you have received the payment and the confirmation is done. You're gonna take that away from the balance sheet because that product is gone, the job is ready, and it's going to be delivered. So once it's delivered, you recognize the sales on the balance sheet as a revenue, and then what you do is you take that out from the finished goods. Sorry. So what we're going to do is credit the finished goods and debit cost of goods sold. So now we're finally moving this in from the balance sheet to your income statement. Okay. So to do that, first we recognize the sale, which is debit account receivable, credit sales, and then what we do is we do a second entry, which is taking away from the inventory, which is credit to the inventory, and we debit your cost of goods sold. So finally we post them onto the balance sheet. Oh, sorry, your income statement. Right. So that's kind of like a whole process of going in from spending the money into delivering the product, and from that period, how do we allocate the cost with the flow of the cost, as well as looking at the back end, the entries for those flow job order costing flow sheet that we looked at, or the steps that we looked at. So the one question that I asked you guys earlier is, the manufacturing overhead account is used as your clearing account. Okay, so when you look at the manufacturing overhead account, we have two sides. One is the actual, another one is the applied. So what happened is, you either going to have over applied or under applied. The perfect situation will be when it balances out. And that can only happen if you did the magic by estimating exactly what your actual cost is. In reality, that never happens. Okay, so you're always going to be either under applied your overhead or over applied. So first we can look at the under applied. So what is under applied? The under applied means that we allocated less. So we under applied. So the actual cost was more than we applied to the job. So the under applied over exists when the amount of overhead applied to the job during the period using the predetermined rate is less than the total amount incurred for the period. So the total amount was higher, or we can say that the amount that we allocated was less. Okay, so in that case, what happened is, the actual amount, that is your debit, is higher than your credit. So you're going to have a debit balance there. Okay, so that's when it is an under applied. That means you applied less than the actual. The over applied is opposite. So the over applied means that you applied more than your estimate, more than your actual. So your actual amount came out to be less than what you applied to the job. So in that case, you're going to have a credit balance. So regardless of whether it's underapplied or overapplied, we have to make that account zero at the end of the year, because you don't want to have a manufacturing overhead account sitting on the balance sheet until the end of the year, because it is a clearing account. Some companies, they park their account on the balance sheet. Some companies, they park their account on an income statement. But to me, it should be on the balance sheet until it's cleared out, because you don't know how much it's going to be and what's going to be the status of that. So what you do is you use it and keep it on the balance sheet, and at the end of the year, it has to have a zero balance. So what do we do? So here is an example. See, the actual overhead for the year was 650,000 with total of 170,000 hours worked on the job. How much overhead to the job during the year? Use the predetermined overhead rate of $4 per direct labor hour. So your actual overhead was 650,000. That's your actual amount. And with the total of 170,000 worked, so they give you the actual hours. Okay, they give you that, that's your actual hour, and the rate that was calculated by your manager, or whoever was doing the cost accounting, they predefined rate that they calculated was $4 direct labor hour. So based on that, I can calculate how much was applied. So the applied should be 170,000, which is the actual hours, times 4. So $104 per direct labor hour times the actual labor hours, which is 170,000. So we applied 680,000. Okay. So now tell me, is it over applied or under applied? Okay, so I don't know what you think, but let's look at it. Okay, so write down, what do you think? Is it over applied or under applied? So if I think about it, when you look at it, how much we applied? 680. What's the actual amount is? 650. Did we apply more? The answer is yes. So if we applied more, we're going to call them is over applied. So it's over applied because we applied more than the actual. So what happened is, we're going to have a credit balance. Okay, so we over applied by $30,000. So according to the accounting standard, the IS2 state that the unallocated overhead are recognized as an expense in the period in which they incurred. So if you have the unallocated expenses, so the unallocated overhead are to be recognized as an expense in the period if it's incurred. So that means we need to put that as an expense. In the period of normal high production, the amount of fixed overhead allocated each product is decreased so that the inventory are not measured above the cost. That's the philosophy behind using that theory. So the balance in the manufacturing must be treated in one of the two ways. So the system or the saying that we can give you two options, but the IS2 states that we need to expense it in the period as it incurred. So that means we're going to have to move that underapplied or overapplied to the cost of goods sold. So, but they gave you two options, saying if the overhead was underapplied, okay, then we close that and move that difference to the cost of goods sold. So that means that if we spend more and we did not allocate everything, we need to close everything to cost of goods sold. Okay, so that's rule number one. And this is only applicable if it's underapplied. So in our example, the previous example we looked at, we overapplied. So this one actually dictates the rules that we just talked about, saying everything need to be expensed, right? So in that case, if you didn't apply any of those overhead that you spend, you need to move that to cost of goods sold. So in that case, and in this case, what you're going to do is you would have a debit balance. What you're going to do is you're going to credit manufacturing overhead, debit cost of goods sold. But on the other side, if the overhead was overapplied, the remaining balance, which is the 30,000, is allocated among three things: WIP, finished goods, and the cost of goods sold. Okay? So what you do is we look at the amount sitting in WIP, finished good, and cost of goods sold for that period, and allocate that over applied amount into these three accounts based on the proportionate rate. So you say, okay, well, what is my balance in WIP? What is my balance in the finished goods? What's my balance in the cost of goods sold? I calculate the percentage of each of the balances, and then whatever the 30,000, whatever that amount you have in the manufacturing overhead account, we will take that and multiply those percentages, and that's the amount that we're going to allocate. So what we will do is we debit the manufacturing overhead, and we're going to credit WIP, FG, which is finished goods, and cost of goods sold with those amounts. Okay, so there is an example. If we were doing directly into the cost of goods sold, we would have done is debit the manufacturing overhead, credit the cost of goods sold if we allocate everything to the cost of goods sold. However, according to the IFRS standards, we need to allocate the 30,000 between these three accounts because that's over allocated, over applied. So what we have to do is you're going to have to find the balance in each of these three accounts. So we have 680,000, and then that is made up of 68,000 in WIP, 204,000 in finished goods, 408,000 in your cost of goods sold. And what we do is we find the percentage. So we take that number, divided by the total, that's 10%. This is 30%, that is 60%. Once I know that percentage, I take the 30,000 that I need to take, multiply by 10% is 3,000, multiply by 30% is 9,000, multiply this by 60%, that's your 18,000. So now, what could have been my journal entry? I will debit manufacturing overhead with 30,000, but instead of crediting everything to cost of goods sold, I'm going to split that between these three accounts. WIP 3,000, finished goods 9,000, cost of goods sold 18,000. Okay. So here is an example for you. I want you guys to read it and look at whether we underapplied or overapplied and tell me what the answer is. So your answer is 50,000 underapplied. So you're given that 290,000 hours were the actual hours, and the rate was given $4. Multiply that, the total amount is 1,160,000. That's what we applied. What is my actual amount? 1,210,000. take the difference. So obviously we under applied because we allocated less than the actual amount. So the under applied was $50,000. Sorry, it's going back. What do you do with the under applied? Remember, the under applied, everything will close to your cost of goods sold. So what we do is we're going to debit the cost of goods sold and we're going to credit manufacturing overhead with $50,000. All right. So just a summary of the overhead cost. We have talked about it, but this is actually a great illustration of what we did or how this works. Okay, I left it there because it's good visualization. Um, direct material, direct labor is easy to allocate because they give you the cost, you take it and you apply it. Is the overhead, you have to find the steps. So this is done at the beginning of the period. So you determine the rate and they usually give you these things. You take that total cost, manufacturing cost estimated divided by the base, the estimated base, and you calculate the rate. And this is happening during the period, during the year. As the jobs are completed, you take the rate multiplied by the base, and that tells you how much of the overhead that we applying. And this kept happening during the period. So if the period is 1 year, as many jobs you work on, as it completes, you apply it. And then what we do here is we look at this and see, okay, well, what happened here? Did we under applied or over applied? This gets checked at the end of the year. So we have that account that we would call them as a clearing account. We keep track of what the actuals are, and then we keep track of what the overhead being applied. And then at the end, you determine is it under or over applied. So you look at it and you ask these questions, is it over applied? If the answer is yes, then you're going to allocate between three accounts based on the percentage that we looked at. If the answer is no, that means it was under applied, then we put everything to your cost of goods sold. Okay, so this is the summary of your overhead, how it works. Okay, this is a flow through. We have talked about it in detail, but this is summary of your accounts. So these are all the balance sheet accounts, and this is the only account that is your income statement. As you buy the raw material, it sits there. As we use the material, it goes to WIP. As we use them, that's my direct material. Anything that indirect material goes right here. The same thing with the wages. Direct material, direct labor goes right here into the WIP, and the indirect labor goes right here on the actual. Okay, so these are all the debits for the actuals. Okay, once the job is completed, you take that overhead that you applied and put it into that WIP. So now when we talk about this WIP, there's not only one WIP. You will have multiple WIPs and there will be a job number assigned to each WIP. If the company uses a system that is capable of job order costing, what you do is they may have a sub account for every single job. Okay, and it stays in the WIP until the work is completed. Once the work is completed, we take it out from the WIP and we debit the finished goods. Okay, it stays on the finished good. Once the product is delivered to the customer, we take it from the finished goods and we post it to the cost of goods sold. Okay, so it's important you don't just understand the flow, you need to understand the entries that goes behind for this flow of the information. Just the theory part, we're not going to make things more complicated in the first managerial accounting one. In reality, the company may have multiple rates because when you look at the manufacturing overhead, that overhead cost may be made of different cost. So you may ended up creating rates, manufacturing overhead, depending on the different categories or the pool of the manufacturing overhead. Okay, so you're never going to have only one rate. You may call the manufacturing overhead 1, 2, 3, and you create a pool of that and you calculate the rate for every full pool because they are driven based on the different base. Okay, so that is the reality that you can have multiple predetermined overhead rates based on different costs that are associated in your jobs. Now, job order costing can be used for cost businesses and also for the NFPU as well, such as the hospitals, airlines is not the NPOs. Non-profit organizations such as like church, or they have like certain department that they do work on different costing. So they may have different department that serve different purposes. So they can track the cost for each of the department that they serve. Accounting firm, which is kind of also a service business, but they also can use job order costing. Auditing is one of that, because when you work on an audit, you know that you need to determine your scope of your work, and that scope of this work will determine how much price you're going to charge as well. Okay, so in that case, the job order costing is not strictly on the manufacturing companies that work on the jobs. It can be used for NFPOs. It can use for professional businesses as well, such as accounting firms, law firms as well, and also from repair shops, right? So when you go take your car to a dealership, before they quote you a price, they need to look at what their job is. And they will determine that by looking at, this is my material that's going to go into that repair job, and this is the labor that's going to go in, and they will make or add miscellaneous expenses to cover the overhead, and then based on that they will determine what that quote you will get from the dealership. Yeah. Most significant cost categories are the service firm, which are labor and overhead, because in service business you don't have material. So that means that's one key thing that you can eliminate from the industry when you're doing job order costing for the service business. Okay, so that wraps up your chapter. So it was an important chapter and a lot of good information. Okay, and I can say that is the job order costing is where you are applying all the theory that you have learned in the last 4 chapters, right? You know what is direct material, you know what is direct labor, you know what is manufacturing overhead. Now in this chapter, what you're doing is you're applying those cost allocation that you learned into the job order costing. Okay, so now what's next? What I want you to do is, if you have not read the chapter, because I can only give you certain information, but you need to go to the test book, make sure you read everything that's given there. And there are great exhibits that are provided in your test book as well that can give you or provide you the real examples. Okay, so make sure you complete that. Okay, and the next part is, after you complete it, I recommend you to start looking at your exercises that are at the back of the test book. And if there's anything that I assigned you as a homework, make sure you try attempting those ones. Okay, and then if you have any questions, write down those questions, and when we hold the class, then you have the opportunity to speak with me, and we can talk about those questions that you may come up from those exercises, or a problem, or anything that you may not understand from this chapter. We can discuss that in our class as well. Okay, and that is it from my end. Okay, and I wish you guys good luck and have yourself a great week, and I'll see you in the next class. Bye bye.